All right, what's going on, everybody? Christopher Franks with Texas West Capital, and the guys are here as well. We're coming at y'all live just after 11 a.m. Central Standard Time on Thursday, the 10th of October, 2024. Beards and Bitcoin, where we talk about whatever the hell we want to. Honestly, most of the time it has to do with Bitcoin, occasionally with beards. Tillman tries to slip in how pretty he is from time to time, and notice I don't have him on the screen here, so he can't say anything about this. But anyway, good to have you guys checking in as always. Make sure you're hitting the like, you're following us. The links there to follow us on X are below the video. Follow the channel here, leave a comment. We'd love to hear from you guys. Again, especially as we always tell you, if you've got something you want us to talk about, or you got something that's of interest with you with Bitcoin that you'd like to hear our thoughts on, leave it in a comment. Whether it's on X or YouTube or whatever, and that way we can address it. Today, I'm going to bring the guys up here in just a minute, but I wanted to start talking off today about JP Morgan analyst coming out here talking about gold and Bitcoin being the debasement trade. So I want to kind of take a little bit of time and talk about that here with the guys to begin with, and then as always, we'll just lead on into all the really important stuff, and we'll make you all smarter just for tuning in. That's what Tillman told me to say. And Andrew was back there saying, yeah, that's right. So let's go ahead and bring the guys up here. There's Mr. Tillman. There's Mr. Andrew. How you guys doing?
We're moving to a new platform next week, and I'm going to be the person that gets to lead us in and spew lies about both of you.
Ain't no lies.
Are you kidding me?
Stretching the truth a bit, but...
You said behind closed doors, let's go impart wisdom to the masses. And I laughed and said, I don't know about that. That's a tall order. And then you just threw me under the bus in front of everybody. You see how that is dirty tricks, Chris. That is dirty.
Dude, you're a big guy. You were an offensive lineman. What am I going to throw you under? A Miata? I mean, come on, man. It's got to be a thing, right? Oh, man. Anyway, so, hey, glad to have you guys here again. Tillman would like y'all to know that he's drinking local coffee. He spends locally.
I spend local and I pay with cash, okay? The forces of compounding are on my side.
That's right. There you go. There you go. And Andrew, of course, let us know before the show that we should always be closing. ABC, guys. If you don't know, you need to learn, right? Coffee is for closers. See that?
That's right. That is right. Coffee is not for anybody but closers. Don't go grabbing that coffee if you're not a closer. Don't go grabbing it, right? And I would assume that your audience, given probably the demographics, remembers that movie.
I would hope so. I would hope so. If not, listen, guys, we're going to make you do a little work. If you don't understand always be closing ABC, Google it.
Yeah. Please.
One of the craziest things today are people that grow up in this age of Google, right? Like we're old enough to remember before Google, right?
Yeah.
BG, sure. Not BC, BG, right? Before Google. And people today coming up here and they're like, well, what do you mean? Or what's this? Or what's that? I'm like, just Google it. Yeah. Oh my God, you've grown up with this.
Go look in the Encyclopedia Britannica that you have in your basement and find out what that is and report back.
Hey, I grew up with that. We had the whole.
I did too. We did too. We had several volumes. Yeah, It was like.
Notice Andrew's being kind of quiet here about that.
Right, Andrew's yet to learn how to read. He still sees in the pictures.
I didn't have the privilege you guys grew up with. We didn't have Encyclopedia Britannicas. I had to go down to the local store and grab a magazine and hope for the best. You know what I mean?
So your parents didn't even tell you about libraries? Oh my gosh!
No. Ride my bike to the local shop. And
you learned everything you needed to learn about life from Mad Max and Mad Magazine.
Right.
Magazines at the corner store. Right. Okay.
I was a degenerate before degenerate were part of the lexicon. Okay, that's the truth.
See, if the audience didn't understand, dude, you guys are getting life experience in here. When we're talking about Bitcoin and markets and everything. This is all coming from life experience first, and it colors our world very well. And
which is why when you hear JP Morgan talking about Bitcoin and gold together, that's not 10 years ago the idea that would happen is insane.
Yeah,
like you'd have never thought about it. Jamie Dimon believed exactly what Warren Buffett believed, that Bitcoin is rat poison, right?
Yep.
And so for JP Morgan, we kind of pounding the table that the trade associated with the debasement of the dollar, that Bitcoin and gold are the two mechanisms to really combat that. That's wild stuff.
So let's extrapolate one thing that's vastly different between the two categories that should be meaningful to us because it should be indicative of price movement. But how much of the world's global gold reserves have we mined?
Yeah. And that's just on the planet, right? Let's not talk about the asteroids up there that got, all that stuff going on.
Yeah, I have no hope in that. Just on the planet, though, I mean, we haven't scratched the surface. The depths that we can go to mine, technology 100 years from now will allow us to get more gold out of the ground than we are getting out now. Just like the oil and gas industry, it just is, it's Moore's law. Technology is twice as productive and half as costly.
Yeah.
So when you look at this specifically, you go, okay, well, if they're equating gold and Bitcoin to one another, do they have the same characteristics? Well, they do in a lot of different ways, but the one that they have very different characteristics on is scarcity. And Bitcoin, on the other hand, 99% of its reserve is essentially gone, because if you count what's been lost and you count what's left to mine, we've got it all out of the ground, basically. So if you go back to like Jack Mahler says this really well. He says, if you look at the denominator constantly staying the same, but more and more buyers coming in, that's the only thing you have to know. I mean, think about that. And so if you believe, as some of the smartest minds do, that a hedge against inflation is Bitcoin and gold, the next question you have to ask yourself is which one's a better hedge? Which one has more scarcity? Which one has more upside potential? And Peter Schiff, which team do you want to be on? Because if you want to be on Peter Schiff's team, you just unsubscribe. Just get off stop watching us, because Peter Schiff is blind as a bat as far as I'm concerned.
The usability of Bitcoin on an everyday basis, besides the fact that we're talking about, scarcity and all of those things, the usability of Bitcoin versus gold, to give you an example, right? So, I'm a big fan of the show Billions, right? There's several times in Billions where crypto and Bitcoin is talked about.
Yeah.
But when it's talked about, it's actually used in a specific way. Mm-hmm. So there was one season where they're doing stuff back and forth, and one guy did something for the firm, and Bobby Axelrod hands him a USB stick, and it says $1 million in Bitcoin and crypto. I mean, can you imagine if that scene was, here's $1 million in gold bars that I'm handing you, and he's gotta grab it all and somehow take it out of the office, and I mean that's ridiculous on its face, right? It's stupid. So you have that as a layer upon layer about the use of Bitcoin. The other thing to consider too, in kind of in real time, and I mentioned this in a post that I put up today. We've been moving around. It really is remarkable that we've been, let's call it, in the 60K range for literally months, 6 months at least. And so, the question is, there's a lot of data points around that. There's been a lot of commentary around that. There's been a lot of whining about it, frankly. But probably the data point that matters most is that since launch, BlackRock's ETF has bought essentially the equivalent of $100 million a day in Bitcoin since launch. Crazy. Okay.
Crazy.
So that's the data point that matters here, is that is BlackRock backing up the truck, backing up the narrative, backing up, probably having conversations with JP Morgan about that research report that they put out. Is BlackRock evangelizing at every event that they're giving a presentation at? They're evangelizing Bitcoin, and then they're backing up their words by bringing clients into that product to the tune of $100 million every trading day that it's open.
Yeah.
Are they doing that for gold or are they doing that for Bitcoin? They're doing it for Bitcoin, right? And the fact of the matter is that there was a study that came out, a Charles Schwab study that talked to quote unquote millennials. And the number one asset class that they're looking to allocate to was crypto. That was just millennials. When they widened the actual amount of people that they talked to in terms of age range, crypto, quote unquote, and Bitcoin ETFs were the second biggest asset that they were looking to allocate to. So, dude, I mean, you've got Larry Fink, you've got Bitcoin on TV shows in terms of usability. You've got JP Morgan talking about the debasement trade. It's now in the minds of investors to the tune of the first or second thing that they think that they need to allocate to. Said it a bunch of times. Larry Fink knows what he's doing. Don't fade the Fink, right? That idea to fade the Fink. This guy is, he's trying to front run everybody that's going to get in at 80, 90, 100, 120K. And he's going to do it, right? So that Schwab study, JP Morgan putting out a note, and the fact that BlackRock is buying $100 million a day in Bitcoin on average is just, my goodness.
Well, I look at it from a control perspective, because control is where the real money is made, and is the way I look at the world. And so think about it. 5 years ago, a friend of mine put a post up, and it really intrigued me. And the post was something regarding historic Black colleges and universities, the HBCUs. And he said something along the lines of, if all of those got together and decided that all tuition was going to be paid in a specific crypto, they would single-handedly control the price of that crypto, because they would have the liquidity, they'd have the use case, they'd have the driving factors that are needed to control a market, and they could create money or create wealth and appreciation based upon the fact that they have critical mass and that they're using that service for their critical mass or for a true use case. So I look at what's going on with Bitcoin as the same thing, but at the highest levels, right? You ask yourself, okay, these groups that are getting together, the JP Morgan Chases of the world, the Larry Finks of the world, if they all take a grip of Bitcoin and there's a limited supply, they could control whatever they want. And what is in their interest to make it go up in value? Why? Because they're large holders of it. Yeah. And so by holding a lot of it and then using it as a base denominated de facto hedge against inflation, unit of measurement against a bunch of derivative products, that by itself is no different than the HBCU saying we're going to use crypto for all of our tuition. It's injecting liquidity to the tune of how much? 100 million a day. Is that what you said, Andrew?
Yeah.
So that injection of liquidity is because it's being used. Now think about that. It's never been used by institutions until now. And what are they using it for? They're using it to create derivative products. That's a casino that only grows in size. It has an endless upside, and you know what the downside is: the base currency or Bitcoin. And so in order for the casino to be built, in order for the derivatives markets to be built around Bitcoin, inevitably the base currency has to be a huge price tag. And so, the question is when, and does something catastrophic derail it until we get to win? In my mind, it's not a matter of if anymore. It's just a matter of can Shea 256 hold on until we get there, or whatever else unforeseen issues that could come up. Is there one that's a deal killer for people? And I again think there's so many outs and so many ways in which you can mitigate those. Larry Fink and those guys have all of them in their back pocket. I think it's too big to fail at this point. That's my personal opinion.
Yeah, they've got, we've got significant backing behind it, as you're saying. They're with that, when you're getting toward that institutional side. I mean, when you've got Fink out there all the time talking about it, you've got JP Morgan analysts coming out and saying, hey, listen, not just gold, but gold and Bitcoin, as the debasement trade. And even with that, that recent article, they're also looking at, say, especially if Trump wins, right? They're saying, especially if Trump wins, because there's this nonpartisan whatever out there that says he'll probably add 7.5 trillion to the to the debt over the next I think it was like 10 years is what it would, his policies, his tariffs and whatnot would say. And so if you're looking at a debasement trade, I mean, well, hell, there it is. But even Kamala coming in, they're still saying what, 3.5 trillion. So either way, I think we've said this before, which is regardless of who wins, overall Bitcoin should still go up. Crypto should still do well. Now with Kamala and her group, maybe some more headwinds there as far as specific cryptos and that kind of stuff. But at the end of the day, the spending, the increase in spending, I mean, it really makes it almost a no-brainer to grab onto Bitcoin.
Well, I think what you're saying in short form is that neither one of them are going to take away the ETFs. And that's right. The constant hose with constant liquidity coming into the pool. And if you just keep the hose in the pool will fill up. And when the pool's filled up, it's more valuable as a pool now than just a potential pool. And that liquidity starts getting used again to fund all sorts of other derivative products. And it becomes infinitely harder to derail that base liquidity pool because you derail everything else with it. And so I don't see any politician coming in and going, Larry, no, we're going to take away your most successful ETF in history.
Right. Exactly. I think the hard work's been done. The hard work was getting it to the point of January of this year. The hard work was getting it to the point where ETFs become a real thing, spot ETFs become a thing. And so, again, I always go back and I've taken your analogy multiple times. I've always given you credit, just so you know here. On the last few weeks, I've been on different shows. I was on Cardone Corner with Gary, I believe it was this past Monday. And I was saying it there again as well. And a couple other shows is, where prior to January, it was all underground, right? January comes out, ETFs come out. Now we're starting this different level, this next level of actual growth, of actual expansion and flowering of this beautiful Bitcoin thing. And, and so we see that now. And so all that hard work was prior to January. Now that we got the ETFs, now it's serious. Now it's big business. We get it to $100,000. Then really institutions honestly start looking at it. A lot of them, they're like, well, we've got so much money that we have to put somewhere that unless this thing's $100,000, $150,000 a coin, it really doesn't make a lot of sense for us to get involved with it. So even the institutions, whatnot, other than Fink, for instance, coming in, are still kind of on the smaller end, the lesser end. But again, with Bitwise continues to come out and talk about, the people that they're talking to. Recently they said, hey, listen, we had these guys that back at the beginning of the year, they were investing, 0.5%, 1% into the Bitcoin ETF, into our ETFs here. And now we've gone back and talked to them and they're upping their allocation to 5 to 6%. I mean, that's huge. We talked about that happening, but I don't think we really expected it necessarily to happen this year, maybe next year, after it's had a full year in there.
Well, that 5 to 6% will end up being, effectively for next year, right? They're making the adjustment to their allocation in Q4 of this year, and so it will. The customer portfolios will adjust to that number, late this year and then throughout the rest of this year. The other thing I'll add is that, when you've got Bitcoin ETFs that are gobbling up, so much Bitcoin on a daily basis, and you have an adjustment in the architecture of the back end of these things. So the example being, and the truth of the example being, is that when they were launched, I think 8 out of the 11 or 9 out of the 11 were using Coinbase as custody. Well, there were small stories that didn't get a ton of press at the time, but you had, JP Morgan as authorized participants. In other words, on the back end, whenever there were buys and sells of the ETF shares, who was handling that process and doing cash create and moving the money back and forth? Well, it was, just a couple of organizations. Well, by the time the second quarter hit, you had JP Morgan begging BlackRock to be an authorized participant, Goldman Sachs, Citigroup, UBS, basically all of the GSIBs, so the biggest global banks on the planet. Then by Q3 a couple months ago, maybe 3 weeks ago now, you have Bank of New York Mellon that comes in as a custody partner and being approved in a backdoor deal with the SEC, because I guarantee you that the banks looked at Coinbase and said, wait a minute, this is a real competitor now. It's a public company. There is lots of capital there. There's going to be more and more and more, and they've got their hands on the underpinning of the fastest growing ETF category on the planet right now. So, hey, we've got lobbyists that should be talking to the SEC from a banking standpoint to get us in on that action. And so there's going to be more that come in on that action to take some of that business away from Coinbase, because we don't want our next generation of customers not being our customers and they're using the Coinbases of the world. I guarantee you that's why that happened, not because whatever reason, but that's the reason, is that Coinbase could get bigger than us very quickly.
I would argue that it was part of the negotiation. I think there was a conversation that was very similar to this. You're a monopoly. We have to break you up. Mm-hmm. Instead of breaking you up to a bunch of unknown competitors and creating an open market environment, you're going to teach the banks how to do this. They're going to be your competitor. Welcome to the big leagues. You're one of us now. If you choose to buck this, you can be on the side of the road just like all the rest of them. And here's the bottom line: the banks need Coinbase, but the banks also can put Coinbase out of business. And so they'd much rather strike a deal where they're working with them to figure out, like Andrew said, how to make money on this new frontier and to adopt the new 21st century banking system. They need Coinbase for that. And they're going to give Coinbase a pass, just like they have given Gemini a pass, because those are pretty much the only two groups on the planet Earth that have done it right. You can't go get Binance to teach you how to do it because they haven't done it right. You can't go get any of the other ones, right? Those two are the ones that the government has said, you get to go from legacy provider to new provider, and you're going to pave the way. And by the way, you're going to partner with all the legacy institutions because you're going to teach everyone how to do this. It's in the, I would consider this as important as national security. Think about it. You have domestic behemoths that literally are the best practices to the world's crypto, and they're both here in the United States.
Yeah.
If you're the U.S. government, don't you want to keep that technology? No different than when Intel was blazing the trail on chips, and that's important stuff. So I think this is a big deal that's taken a lot.
Well, all right, he's left us, so I'll pick up where he left off, and some people know this about my Twitter account, but when there was lots going on with the SEC and Coinbase and Binance, and they hit them on back-to-back days, last year. I have connections and sources at the SEC and the OCC and a bunch of different organizations. I didn't go looking for those connections. I've never worked there, but Twitter is a weird thing, and people reach out to you, and then you have more conversations and more conversations. Anyways, it was told to me a year and a half ago that no matter what the SEC does in with lawsuits and whatever, Coinbase is a knighted organization. Yeah. They have been chosen to to follow a particular path that ultimately nothing bad is going to happen to them. They have been chosen. And so I agree with Tillman on this, that whether we like it or not, and Bitcoin is the off ramp to this, by the way, self custody of your Bitcoin is the off ramp to some of these inconvenient truths. Like, there is a small group of banks and of leaders and of guys that make these decisions that are completely outside of what should be, competition and capitalism at its core. These are decisions that get made, and conversations are had with Coinbase that says, yeah, no, you're not going to be 9 of the 11 custody for Bitcoin. There's no way you're going to do that. That's going to change, and you can either like it or not like it, but it's going to change. How do you you do a deal that you can't refuse, right?
It's a congratulatory moment if you look at it from that side of it, right? If you're Coinbase, you're going, holy cow, I've just been invited to the round table. I'm one of the round table knights now. But you're right. It's a very different vision that I think they set out to achieve.
Yeah. So it goes to the ethos of Bitcoin. So Bitcoin at its core is still a buy Bitcoin and self-custody, right? So our firm, Arch Public, here's a plug, thearchpublic.com. All right, now we can move on. But we have a concierge program that we have with people that trade higher levels of our algos. One of the things that we're going to do over the next month or so with our concierge program folks is we're going to send them a little gift and invite them into our Bitcoin algorithm by sending them a cool little thing from, I don't know if it's Trezor or whatnot, but it's a seed phrase. Yeah, it's a metal seed phrase type of little deal that you get from Trezor. That is essentially an invite to self-custody your Bitcoin. Be sovereign, be your own bank. Those types of things.
Or just learn about the technology, right? It just gives them a little glimpse into how the tech works, and that is where the magic is. Like, once you start understanding Bitcoin at a fundamental level, you don't need anybody to convince you anymore. It is that beautiful and that pure. And seed phrases, are complicated until you use them and understand them. And this is a object lesson that allows people to educate themselves a little bit.
This is completely off topic, but it feels to me, Chris, that Tillman is just a slightly cooler than us, and here's why. Like, he's got the flat bill, and it's a little like off cocked, right? Like he's just there's a coolness to it. I don't think he tries, but I think it just happens. Like, he's just a little bit. He's like 7% cooler than we are.
He's got that shit, right?
I'm slightly jealous.
Well, listen.
And it's a funny looking color that somehow he can pull off. If I wore that color, someone would call me. There'd be names that would be called. Okay, truth, right? But he pulled it off somehow. I don't know how.
Well, listen, it's a vast improvement.
It's the half-cocked deal. It's the little bit of the turn of the hat that's just.
I don't think it's half-cocked. I think it's just the way I'm holding my phone, Andrew. But I will. I think y'all cut me off, or I got disconnected when I was making.
Wait. Let me stop here. Why is the first thing you said? I think y'all cut me off.
Because I know has his finger on the button. You have your finger on the button, and anytime I get okay. So here's the thing I will say. There's been a lot of backlash to what Michael Saylor talked about, I guess a couple weeks ago, regarding Bitcoin producing yield, and that it's a foregone conclusion that it will produce yield. It will be a yield-bearing asset. A lot of backlash. Tons of people have said immediately. Well, I just want them to look at nature and what we've talked about from a subterranean growth versus above ground growth. What's the point of a plant reaching towards the sun? What's the point of a plant growing above the ground? To bear fruit, to yield something. That is the only reason why it exists, to yield a seed so it can propagate and make more plants. That is a fundamental value that is found in nature that extends to investing. That's why Warren Buffett doesn't touch Bitcoin, because he fundamentally doesn't believe in anything that doesn't yield something. So yield is a natural part of what's going to happen to Bitcoin in the future. And for you to think that it's not is just you not knowing what their plan is and not knowing that their plan cannot be changed because it's a formula to run the world, and they've done it successfully and they will continue to do it successfully by creating products based upon derivatives of all sorts, shapes, flavors, colors. If you want to bet on Bitcoin, there's going to be 100 different ways to bet on it. And that's a natural progression of markets. And we should be excited about that because we were here first. We own the actual base asset, which is, a great problem to have. In the future, you may be trading ETF funds that are, fractional ownership of Bitcoins down to levels that we couldn't even comprehend right now because the price is so high. And that's what the true Bitcoiners believe, but they believe it's going to be based upon individual demand. And I don't. I think it's going to be based upon liquidity pools being built and the people who have the liquidity needing a place to put it, and they start piping it into this one because it's a great place to put it. And so, yeah.
Well, a lot of what's happened over the last couple of years have really upset a lot of people, as Bitcoin has matured. It's nothing different than what I was talking about years ago, once I got in this space and, talking about the way we would see this kind of crypto and Bitcoin kind of continue to grow, right? We're just talking about CBDCs, you talk about stable coins, we talk about Bitcoin. It makes sense. A lot of the people that are even in it today, but especially as of, just 2 years ago, we come from that idea of, self-sovereignty, be your own bank and whatnot. But as I've continued to point out over and over again, most people don't want that. They don't want the responsibility. They don't want to be their own bank. They don't want to be their own security. It's why, they fall to and believe whatever government tells them about, we're doing this, for your benefit, for your security. Well, not really, but they're going to say it, right? And so,
well, I would dissect that a little bit more, Chris, and I'll tell you why. Because I don't think anybody on this panel or anybody that has been around for a while would suggest that people keep their life savings in cash in their house. Right. That's being your own bank too. So being your own bank is not the answer for everybody.
Right.
But
exactly.
You see what I'm saying? Like, I think that's a risky thing. I think that being your own bank with 100% of your money is, if my friend said, hey, my net worth's 100 grand and I've got it in my mattress in cash, I'd be having an intervention with them. Like, hey man, that's very, so being your own bank is great for a lot of people and at a certain level. But above that, we need trusted custodians. Like, we need our life to be easy so that we can go be dentists and doctors and firefighters and the things that we're pursuing with our time. And seed phrases and cold storage wallets, they're for some, they're not for all. But here's the good news. That part of the value of Bitcoin can be detached, and it still is the best performing asset over the last 15 years. And it still has all the intrinsic value of gold, of scarcity, fungibility, all those things without you even having to be a self-custody guy or a girl. So I would just argue that self-custody, I've lost Bitcoin. I've lost money self-custodying because I've made mistakes. That's just the way it works.
Haven't we all?
Yeah. And so, with somebody that I've also had friends of mine who were very wealthy people say, hey, can you help me with a little issue I'm having with my cold storage wallet? I'm like, yeah, sure. Come on by. He'll come by with the wallet and the seed phrase written on a piece of paper, opening the box. And I'm going, man, what are you doing?
Trying to lose your money.
That's exactly right. I mean, listen, you get in a car accident on the way here, the EMT is not going to tell anybody about that piece of paper they took.
It wasn't there.
It wasn't there. I never saw it.
You promised me you wouldn't tell that story to other people. You said you wouldn't tell anybody.
Listen,
but this is a great point, though. And this is exactly where I was getting to, right? Because, so here's the thing. And Fiboswani says, dollars in your house is very different than something digital, but I get what you're saying. And my pushback to that would still be, well, here's the problem. If somebody knows that you're holding Bitcoin, you become a target. Correct. It's a lot easier to get your Bitcoin out of you than it is to get your money out of the bank. And if you're getting the money out of the bank, there's a lot more recourse on that, than if you're just, if somebody gets your, your Bitcoin from your, whatever you're holding, your cold wallet, they got your phrase and everything. So there is definitely, this is the big thing, especially when you're talking about the fact that in order to get Bitcoin to a price where it becomes really interesting, you have to have large institutional investment. You have to have large, high net worth individuals doing it. And, you can say all day, sure, I want to hold 500 grand in a cold wallet. Maybe, okay, that's still kind of dangerous to hold it all there. But I mean, you get to the point where you go, okay, well, is there some way I can hold it with a bank or something that has maybe, that I can get some kind of protection from government in case, something happens.
More than protection, you're going to get yield. That's the whole point of the yield conversation, is like, who can provide you yield? People who hold your assets. That's literally the definition of yield. Time value of money. If I get access to your money for a certain period of time, I owe you something for it, and that's interest. And if you have Bitcoin and you let JP Morgan Chase hold it, you now have avoided the concern of, quote, you losing it. You've gotten rid of all the catastrophic risk. You're getting yield on it, right? And you don't have all of the messiness that goes along with self-custody. I don't think there's any way that self-custody is going to be a mainstay 20 years from now. Bitcoin will be around 20 years from now, and I'd venture to guess that the tiniest fraction of people will actually hold it themselves.
Well, it's the concept of, if a guy's worth $100 million and he's got a safe room in his house, he doesn't have more than 0.5% of his net worth in that safe room, in gold bars and a couple paintings and whatever. Like that, you don't. All the other stuff is in places that you trust, right? Yeah. Because you may, this is the conversation about self-custody, right? If you've got, if you're worth $100 million, how much are you going to keep, on a cold storage wallet, given the concerns about being able to manage it and losing a seed phrase, not being able to remember it. Oh, what happened? Somebody stole the safe that I had the seed phrase in, and now, well, it is what it is now. So yeah, you don't hold half of your net worth in that safe room, because that's just unwise.
Well, and maybe the industry will maybe the industry will prove us wrong, and there'll be third-party insurers that would want to incur that risk, and you could insure. But I doubt it. I mean, can you imagine going to an insurance company and going, "Yeah, I need you to insure, $2 million of Bitcoin." Okay, well, where's it stored? It's stored at my house on a piece of paper that I've rolled up and put in my safe. I mean, they're going to go, "No, go deposit in JP Morgan and get the insurance that way." Well, but see, that's the kind of the point, is like, when an asset matures, it becomes borrowable. You can borrow money against it. It does produce a yield, and it's insured against. Those three things are here. Like, you can insure against your brokerage account. It is insured. You're getting yield in the very near future with Bitcoin, which is coming around the corner. That's the next thing, right? And now you have third-party custody providers that are the biggest names, and you're having to trust some fund out in the middle of nowhere that you've never heard of before. You've literally got your money with JP Morgan Chase. I mean, that's as good as it gets.
Yeah. And I think that's the big point, though, right? Because again, we're still, Bitcoin is still new, but we're kind of getting into now that more of that mainstream acceptance, right? But 10 years from now, as you're saying here, where there's going to be very little, 10, 20 years from now, probably be very little self-custody. It makes a lot of sense when you think about it, because as it becomes more of a mainstream thing, then we assume everybody hears about it. We assume everybody knows what we know, because we're all on Twitter. We're all on crypto Twitter. We're all sucked into there, talking about it daily. But the reality is most people don't. And even those that do, most of them, not to the degree that, for instance, the three of us or, most of the listeners here understand it. And so as you get more and more of the populace turned on to Bitcoin, they're not starting like where we started. We had to start with self-custody. We had to start with the general ethos of Bitcoin and sovereignty and all this kind of stuff. But these people coming in now, no, this is another financial product, another financial thing for them, based in the way that they're used to with everything else. And so it makes sense that they would just not even worry about the self-custody thing.
That's why I have tremendous respect for people like Eric Voorhees and Tyler and Cameron Winklevoss and Charlie Shrem. I mean, these are guys that were effectively the forefathers of Bitcoin, the Bitcoin movement. And, you know, there was this HBO documentary, which was stupid. I haven't watched it. But there is a good documentary on Bitcoin called Banking on Bitcoin, which came out on Netflix years ago. And it's effectively set in like 2014. So if you want to get a really good feel of self-custody, there were no exchanges that existed at that time, by the way. The first exchanges were like, I forget what it's called, but Charlie Shrem and Eric were running it. And then the Winklevoss twins came in and were part of it too.
Well, if you wanted to find a seller, you had to physically find the buyer. Like, you know,
it was again, it goes really to the ethos of how things happened and the way that they happened and where they were headed. And it's just from where we were to where we are. And I'm even looking on another screen here, and I look back on 40 years of how the markets evolve. Right, the New York Stock Exchange used to have 2,000 people on the floor and green screens and people yelling and screaming at each other. That's all gone, and it's now basically a church that nobody goes to unless they want to take pictures and they're tourists and they want to ring the theoretical bell. Right, it's just it's a glorified conference room. And so the same process will play out associated with Bitcoin as an asset, meaning that it will turn into an asset that you will be able to leverage or lend or yield. And those three things are essentially a little bit of a different version of the same thing.
Yeah.
And it's just a question of how you want to benefit from it. Right? How do you choose to benefit from it? And most people that are of market's age, most people that have capital are very, very comfortable with, I don't really care about the philosophy of Bitcoin, but I really like the performance, and the Bitcoin ETFs gives me the performance. That's what it gives.
I would argue that they actually despise the philosophy, and that's why they've been slow to adopt. The culture of Bitcoin is distasteful to them because the culture of Bitcoin is anti-establishment, and they are the establishment. So you can't, and so they're defining the rules based upon the fact that it's that big and it's gotten that serious, and we should be standing at the sidelines of Bitcoin, marveling at the technology that it is. But we can't at any point, and I think this is the fallacy of a lot of Bitcoiners, is take ownership of it as if we know what the world's best use for it is. That's a pretty prideful and presumptuous thing to assume when you haven't built financial systems successfully in the past. And quite frankly, you've been a user of a successful financial system called Bitcoin, but you didn't contribute that to any of that either. You know what I mean? Like creating a fair and equitable market where liquidity wants to find a home and lives there for a long time. That very, very few people have that knowledge on this earth. And so, Larry Fink's one of them. Probably should be happy delegating it to him as being the team captain from this day going forward, instead of, some of the people that we've delegated to being our team captain in the past.
Chris, do you think that Tillman gave real thought to his hat color and his eye color today? I feel
honestly, I was just thinking that a second ago. It's so perfect with the match there. And then I was thinking back to your comment earlier about how he could get away with that color. And I think that's what it is.
I have a great wife, and she told me that hat looks good on you because it matches your eyes, and I got it because of that, and so I wear it because of that.
See, we figured it out. Yeah, it was just hitting me as well just a minute ago. It just all of a sudden was popping.
I'm just glad to know that you guys are in love with me. That's awesome to know.
Hey, somebody's got to be, right? Somebody's got to be. Your wife can't just do it all herself, man. But yeah, no, and a lot of these things that we're saying here, for the more of the maximalists, it's things they don't want to hear. But again, when I came in to the space back in 2017, One of the first things I said back then was the masses aren't really going to come until we make it easy. It's really difficult right now. You got to send, you got to make sure you get the address correct. If you don't get it correct, guess what? You lost it forever. People don't want to deal with that. Me today, I still send small little things and I double check those before I send them, before I send a bigger payment.
Well, Chris, to your point, did you see the transaction that Trump did for the hamburgers in the pub?
Yeah.
It failed 3 times and it was a catastrophe. And I wanted to stop right there and go, guys, why are you wasting precious opportunities with Trump trying to show him that it can buy coffee and hamburgers when it's literally digital gold? You should be sitting at a round table talking about how it should be the denominator against infinite number of derivatives products that we can create. And by the way, we should have a strategic national reserve because it's digital gold. Why are we training the ex-president and potentially the future president to look at Bitcoin as a means of denominating cheeseburgers? That's the craziest thing I've ever seen. And it's again, maximalists not knowing where the direction or the vision of Bitcoin should be and not taking a hint. Larry Fink, I promise you, would think that was the silliest thing. He would not be in that pub going, yeah, let's buy cheeseburgers with Bitcoin. He's thinking, oh, would you buy cheeseburgers with gold? No, that's not its purpose. Its purpose is a hedge against fiat. So use fiat for expenses, use fiat for cheeseburgers, and keep your Bitcoin in cold storage or in ETF form or whatever. That is the classic example of the disconnect between the financial sector and what they think Bitcoin is, and the Bitcoin maximalist or the original Bitcoin crew and what they think Bitcoin is. And here's the sad part. They're both right. One's just a lot more right. Can you use Bitcoin to buy hamburgers in, some Timbuktu country that doesn't have financial rails? Yeah, you can. Is that use case a qualified use case? Yes, it is. But is it the best means to do that? Absolutely not. You're going to stand at the register for 10 to 30 minutes based upon settlement time. And even then, it's going to be clunky as heck because there's no apps that really function the way that a credit card functions. So it's the fool's errand. It's like these people can't let the new vision of Bitcoin be the vision, because it is. And no one's going to change it because you've got too much money saying that it is.
Yeah. And of course, if you all just joined in and you hear this, you might be thinking that we're crapping on, maximalists, and not at all. Everything that gets started needs the maximalist to get it going to begin with. You need that diehard, raw. This thing needs to go, and you need that, right? But eventually, if it is to become a thing that is used by the masses, it needs to become a thing that's used by the masses. And you can't do that holding on to that maximalist view of whatever that thing is. In this case, we talk about Bitcoin. You can't get it. And maybe you go, okay, well, I'm a maximalist and I don't want Bitcoin to get to this big use case. Well, why wouldn't you? If you wanted to do the things that you wanted to do in terms of preserving wealth or exiting you out of the system, that's what you want.
Well, that should tell you that you care more about ego.
We lost your voice there. Oh, there you
Sorry, I said that just tells me that they care more about being right than about making money, because you try to prove to me that the highest and best use case isn't it being instituted and implemented into every 401k in the world, versus you telling people that they can buy coffee at a coffee shop and don't have to ask permission from the banks to do it. I mean, come on, it's a joke.
And even if it was simple as a credit card to use to do that, again, why would you choose to use Bitcoin to pay for your $1 coffee or whatever coffee is these days, or your $4 hamburger, or your your $2 newspaper?
You do that because it gets views on Twitter. That's basic.
Correct. Well, because you're proving a point. You're saying I don't believe in fiat anymore, more than saying I believe in Bitcoin. Figure out which one you believe in most, because I don't to say that you don't believe in fiat is again foolish in my opinion, because fiat is not about a store value. We all know it inflates. We know it's all necessary though for the mechanisms of society, for the government to control commerce. That is what it's there for. And so to think that they're going to give up on fiat as a means of control is just stupid, in my opinion. Like, they're not going to give up control when they don't have to. The question then becomes, okay, so fiat's going to be around. Well, Bitcoin's going to be around too. Well, how does that work if you're thinking Bitcoin is going to replace fiat? It's not. Bitcoin is going to be a hard asset, and fiat is going to be something that you can trade Bitcoin for and buy coffee with. That's how it's been going on for lots and lots of years, and I don't think anybody's going to get away from it. Now, we may get away from paper fiat, but we're not going to get away from digital fiat. I mean, even digital fiat has, the use case is so strong. Why do you think stable coins exist? Because we need digital fiat, that period, the end. Fiat, a stable value across commodity purchases or use purchases, is a necessary part of every civilization.
And at the end of the day, there are going to be people, there are going to be people that are going to remain maximalist, and, they're going to, opt out of the system. They're going to do their thing. But again, the reality of it is most people, significantly, most people have no interest in doing that. Whether you believe it's right or wrong that they have no interest in doing it, the fact is they have no interest in doing it. And so again, if you want Bitcoin to continue, if you want it to flourish, if you want it to be that thing generally that you have bought it to be, and you bought in as a maximalist for it to be, inevitably you've got to get it into what we're doing right now, what you're seeing with it.
You can double and triple down on the stupidity of paying for certain things in Bitcoin, right? So there's a million examples. The pizza guy that we celebrate every year, that guy spent $4,300 million on pizza. Like, that's dumb. There's a video out there about, real estate, where one of those shows where a guy wanted to pay 242 Bitcoin for a penthouse in New York City. And even if he would have done that, it would have been the dumbest transaction in the history of the world, not only for him, but it's also the dumbest transaction ever because the guy didn't accept the offer in Bitcoin. That transaction would have been worth 7x what it was then.
Or how about Tyler and Cameron's guy who painted the mural at the front of their office at the Gemini? Did you read about that guy?
No.
Early on in Gemini, I can't remember the year, but they wanted a really snazzy piece of art in the front of their office, and they hired an artist. You in Bitcoin, and
there you go.
Am I back?
Yeah, you're back.
Yeah. So they sorry, I'm getting lots of phone calls. They said, "Hey, can we pay you in Bitcoin for your artwork?" And they said, "Yeah." He said, "Yes." And that Bitcoin that he got, I don't know how much it's worth because I don't want to unquote it, but more than $10 million for that mural that he painted in the front of the office. Same type of a thing. It's like, as soon as you hear about Bitcoin, the thing that everyone that I've ever talked to, including myself, wishes they had done is steadily buy it from that day going forward. That's the recipe right there.
Yeah. Yeah. But that's the hard thing, right? When something's new, you're like, oh man, this could be so great. We could do so great with this. But at the same time, you're scared to, oh my God, what if it doesn't work out? But then it works out and you go back to it and go, damn, if only I had done that. So goes life, right? We deal with that all the time. It is what it is. The important thing is to figure it out as soon as possible so you can start stacking whatever that asset is at, the lowest price possible prior to it really blowing up. And I think people still have that chance right now. Again, I still see them scared. People still ask me about, well, what's going on with whatever right now. I'm so scared. I'm going to hold off and try to buy it lower. And, and often that's.
Well, here, I'll give you another analogy, right? Everybody's scared of that, but they're not scared to go buy a $65,000 car that they know is going to zero. A car will go to zero, guaranteed. And so the question is like, look at your life. Are you practicing what you're preaching? Is your fear rational or is it irrational based upon your actions? And so if you look at your life and you go, yeah, I've got a bunch of depreciatory assets that I have cash in, and I have no Bitcoin, I don't know anybody that would not argue for diversification on every front. And so you just have to ask yourself, like, am I diversified? Is that something that I need exposure to? And if you have a lot of exposure to depreciatory things or things that have ongoing liabilities of cost attached to them, like real estate, I don't know one person, there's some very wealthy people out there that own a lot of real estate. They're all highly leveraged, and there are certain scenarios that cause them to go bust. You know what I'm saying? The cash flow is greater than the cash liability, but that's not written in stone. That can go upside down just like any yield can. And so when you look at owning Bitcoin, you have to ask yourself hard questions like, how many assets do I own that have limited scarcity? Truthfully, how many do I own any? If I own gold, that's an asset that has limited scarcity. Do I own any assets that have literally a fixed supply? Bitcoin is in a different category. If I offered you an opportunity to own a one of one Leonardo da Vinci artwork, right? There's only one of those. And if you could afford to buy it, you'd buy it because it's only going to go up in value the further you get from his death. It's scarcer and scarcer and scarcer the further you go out. Same thing with Bitcoin. So if you're looking at Bitcoin, you're going, you know what, I don't really need any of this. Then I would ask yourself the next question of, okay, if you don't need any of it, you either don't believe in diversification or you have a competing asset already in your portfolio. And I would argue there is no competing asset. So I would.
I mean, I think we made that point clear earlier when we were talking about gold and saying, well, listen, how much gold is still out there? Well, truth be told, there's probably quite a bit, and like you said, technology is going to make it easier to bring up, more gold will be found. And that's just here on the planet. We're not talking about all the gold everywhere else and all the meteorites, right? There's the one meteorite flying out there that has like $10 trillion or something of gold in it and other, minerals or other metals. And so when you really kind of consider that, I mean, it makes a lot of sense why people would actually move at least some of their exposure from gold to Bitcoin. I mean, I think you're almost irresponsible if you don't, because Bitcoin is limited, to 21 million. And of course, again, as you pointed out, we've already lost, 5% of it, something like that already, that we're never going to get back. So it's even scarcer than what it was. And most of it's already been advertised.
That's right. Yeah. It can only be scarcer than advertised. Think about that. There's always fewer than everyone thinks there is, because there's coins being lost right now and right now and right now and right now, and it will always happen that way. There are errors that can be made on the Bitcoin network from a self-custody perspective that burn the Bitcoin forever and ever. They never exist again. And that's always going to be the case. And so the smaller the percentage of coins that are in self-custody, the smaller percentage of coins that are going to be burned incidentally. But right now, I mean, it's still a very common problem, and lots of people
it's still the Wild West, more or less.
It's still the wild West, exactly. So yeah.
For those wondering, Andrew had to jump off for a call for work there, so that's why he had to leave just before we were done here. But I, again, love the conversation as always. I think the analysts are right. I think the JPM analysts are right. I think you look at gold and Bitcoin, and hopefully we've made a good case for why probably more so Bitcoin as the debasement trade. The fact is, governments aren't going to stop spending money. They're going to keep spending it. If the last 100 years hasn't proven that to you, well, get on your longevity kind of workouts that you need to do so you can check back in 100 years from now and see that it is, right? It just is the way it is. Debt-based seems to be the way the governments want to do it because it's the way they can control. And at the end of the day, that's what power does. Power is about controlling.
Well, if you had a printing press, Chris, that had a Chris dollar that you were able to legally print and pay your bills with,
what do you mean?
When would you stop using that?
Exactly.
When people stop taking it. That's
exactly. Yeah. So absolutely, and that real quick here before we jump off here, I just want to say that's kind of my other part about the Fed, right? Everybody talks about the Fed's dual mandate, employment and inflation. But at the end of the day, their real number one job is to keep people using the dollar.
Correct.
That's it. Because if people stop using the dollar, the other two, they've got nothing they can do about it. So when you guys sit here and you wonder why, you go, oh, the Fed is so stupid because they did this and that. First of all, you need to remind yourself, how many damn PhDs do they have in there? Okay. They're not stupid people. The second thing you need to then look at is, okay, well, let's assume they're not stupid people. So that means whatever they're doing, there must be a reason that they're doing it. And to me, it doesn't seem like it makes sense because it's doing this and that. But if what they're doing is keeping, for instance, China from dumping a ton of treasuries, and continuing to use the dollars and to buy the pristine collateral, the treasuries, I mean, that keeps the whole system going.
Well, you just don't understand macroeconomics if you can't get your arms around this, because Amazon, I don't know how many years, but the first 20 years of their existence, they didn't make money. They lost money, and lots of it, every single year. Why? They were buying market share in the wild, wild west of the World Wide Web, right? That's the same thing that America does. We're just buying market share of innovation. And that innovation provides liquidity, provides more sales, provides more GDP. So it's not something like my dad's been a gold bug since I was a kid. And he's been talking about the dollar getting weaker and weaker and weaker and being debased for a very long time. The reality of it is that our kids' could be talking about our GDP in the hundreds of trillions, and the systems still be working just the way that it's working now. But it's just bigger numbers. It doesn't mean anything. It's all relative to, the potential of the earnings that are the companies that we're leveraging. So if we are the AI ruler of the world, we can't print enough cash. We will own the world. We will have more value extracted through that technology than the amount of cash that we could ever print. The question is the dance of doing that in real time, and that's what the Fed does.
And real quick here, just to go back on that, you're talking about your dad's been doing ever since you were a kid. When you were a kid, and he was talking about the debasement of the dollar, I'm sure he never really honestly thought, man, we the U.S. would be this. It would be, have this much debt outstanding.
Well, honestly, if you're going to, he would not think that we would have this much debt outstanding, but he also wouldn't think that we'd be calling interest rates at 9% catastrophically high, because in the 80s, the interest rates were in the 20s.
Yeah.
So, things aren't as bad as people make them out to be. If fear sells, a lot of newspapers, a lot of print, people like to read fear.
Exactly. Fear is the thing. Real quick here, before we jump out of here, Revy says, what'd you say here, Revy? You said Tillman makes a great point. He did? Okay. Well, he makes a great point regarding the Da Vinci artwork. And I'd add that Bitcoin's hash rate network security is the equivalent of having the most respected critics on the planet praise that said artwork.
I would agree.
Look at that. You're creating fans, man. Look at you. Look at you. This is always so much fun, man. I know we need to get out of here. I know you've got things to do, and I know I've got things to do. And people watching, I don't think they have anything to do, but we're going to go anyway. As always, man, such a great time with you and Andrew. Listen, everybody, we'll be back to Wednesday again next week. So 11 a.m. Central, 12 p.m. Eastern. Same channels, same places of US. Follow the guys there at AP_abacus, at TexasOL61. He's laughing because he thought I was going to mess it up. I got it, though. And then me, I'm at TX West Capital. And also check out thearchpublic.com.
Oh, you got 2 for 2. I think that's the first time.
I'm hot today. I'm hot. And check out, while you're at it, check out TexasWestCapital.com if you're interested in joining our group coaching. Basically, it's just focused around teaching you how and why markets really move the way they do, which is something nobody else out there does. And along the way, you're going to learn a hell of a lot about trading and even more about yourself. And if you'd like to join us, you can also do it at the TWC Traders Club. So TWCTradersClub.com. You can get in on that and take the same trades that myself, Thibaswani, Andrew, not this Andrew, different Andrew, and Vince are taking every day throughout the week, as well as our market takes throughout the day and what's going on. We've got so many ways for you guys to come in and just learn more about trading markets and yourself. And then, of course,
I like I want to learn the RSI trick. I saw that
RSI trick.
Yeah, I want to learn the RSI trick.
It's pretty crazy how great it works. If you guys are wondering, I threw a thread on Twitter, I guess yesterday, explaining a simple RSI strategy, using it a bit different than most people use it, and it's a pretty incredible trade. So check that out. Again, that's at TX West Capital. You can check it out there. But hopefully you guys, are getting something out of this. As always, we love doing it. I mean, we really do. It's so much fun. I run my companies. These guys run their company. And we still make time in our busy lives to do this because we really enjoy talking with you all about what our thoughts about Bitcoin and the greater monetary system is, and, how this all integrates and what you can potentially look forward to, and why it's not necessarily a bad thing the way things are going, and how you can, really kind of look to make money off that. So keep coming back. We'd love to hear from you. Like I said, if you guys have anything that you want us to talk about, if sometime during the week, there's something that you want us to, you come across on Bitcoin, you want us to talk about and discuss, leave a comment somewhere. Let us know, tag us, and then we can see it the next week, and we'll talk about it.
And we could even have some guest speakers on if we have a specific topic that people want to talk about. We know a lot of people in the space, and can
look at that. We can bring
somebody on that's an industry expert to talk about whatever topic you guys are interested in. So
look at how awesome that is. So get to it, guys. Figure out what you want us to talk about. If it's something extra, let us know. We'd love to take it. Have a fantastic week. Trade safe out there. Remember, the only thing you control is how much you lose. So always, always, always be working on that risk management. I don't care if you've got a long-term thesis investment or a short-term trade. It's all about your risk management, folks, because that is absolutely the only thing you can control in the markets, which is why Tillman and these guys over there, their algorithms work with that in mind. So again, be sure to check them out as well. All right. I'm done keeping you guys chatter here and going on. Have a great week. Tillman, I'll talk to you guys
later. See you, everybody.
Right?
See you, Chris. All right. Bye.
All right, man. Take it easy. And let me see if I can figure out how to do this.